the channel 10x investors. I hope you guys are having a great day. You can see that the markets are trying really hard to shift from the decline, and obviously tomorrow is the day where the Trump tariffs are going to take a hit. We got to see what Trump is going to do tomorrow, and on top of that, we also have to see what investors are going to react and how they're going to react. And just wanted to give a quick breakdown of the portfolio today. If you can see, like, I did have about a 1.36% rise. And you can see we beat the NASDAQ, Dow Jones, and S&P, Russell. Actually, it would probably be better to compare it with the markets. So there's a modest growth of NASDAQ today, and then S&P 500, Russell, and then Dow Jones. And the interesting thing here is, if you can see, the GSG is just stayed flat today, and that's a good thing for stocks. Is we don't want to see the commodities to be rising, and really once the commodities are kind of flattened out or starting a decline, and then you can see the money pouring into the stocks. And so it's really good to see that the portfolio is doing well, but I don't really count on it in terms of this short-term growth. Once the market starts flipping, which if you hear Tom Lee saying that it's going to flip after April 2nd, we just kind of have to see how that's going to play out. But if it does, man, these stocks are going to just skyrocket. And another mention that I have to say is Celsius. Celsius has been just killing it these past 5 days, like past month, 40% in the past 1 month. So Celsius is doing really, really good. And this is kind of the price that maybe like $38-40 is what I was hoping that Celsius would be going till, and kind of stabilizing there until the earnings, next earnings, and see if there might be a good growth potential. And once investors get that confidence, then this is going to be a $50 stock in no time. So portfolio is doing well, and my upcoming purchases, the potential buys, I'm really gonna get this PayPal, and also most likely either one of these stocks, or maybe all of them. Caterpillar, I'm keeping my eye on it. And then the next would be like the Adobe is really good at this price. I mean, so the main purpose of today's video is to kind of go over some of the really good stocks. I chose some 5 stocks to buy in the month of April, and I'm going to analyze each one of those stocks to give you guys a better idea of like at what price point that you could potentially enter, and also to see how much potential there is in terms of growth. Okay, so it took me a while to make this video. I got all the numbers from reputable sources, and I'm also using tickerdata.com pre-made sheets. I modified it just a little bit for my understanding, and also to just make things easier. So let's go ahead, and I think the first stock we have here is AMD. Lisa Su gave that interview yesterday. Great interview. I advise everybody to see it and really see the potential that AMD has. Currently trading at a very cheap forward PE of just 22. It's a good price to enter here. I know the forward PE is pretty high, but you really gotta go with the trailing PE is really high, but you really gotta go with the forward PE, because you're investing your money now to see the growth later. So the analysts are expecting an average PE of $4.67 with the growth of about 41%, next year 33%. So let's go ahead and plug it in our tickerdata.com sheets. And one of the metrics that I really like is the return of equity. and also like to check their gross profit ratio, net income ratio. So this business metrics gives you a really nice idea of how the business is doing. So let's go ahead into the Grams valuation, and we see that AMD current average estimate EPS for this year is 467. We'll go ahead and plug that in. And we saw that the growth rate for this year is about 41%. So, and then next year is 30%, 33%. So we'll go ahead and modest put it in at 35% for the next 2 years. So if you do that with 20% margin of safety, the acceptable buy price is $153 and the intrinsic value is $197. So great entry point here. If you can go and look at the discounted cash flow model, obviously AMD is making a lot of these acquisitions, and that which is affecting their cash flows. But if we do the free cash flow analysis here for AMD, we can kind of get an idea as what is their 10-year free cash flow compounded annual growth rate, and we can plug that number in for a more accurate information. So 5 years is 54%, and then the previous 3 years is like minus 10%. So overall, they are growing, but they're just not at the pace that we would want to for a company of this scale. But regardless, if you look at this free cash flow growth, it's a cyclical, right? And you're coming into this AI adoption, which is just starting right now, as described by Lisa Su on the interview. I think AMD has a great potential, and really I would go with, like, going forward, AMD is gonna at least have it even 20% like growth in terms of their free cash flow, if not higher, way higher. If you looked at AMD's free cash flow growth, let me plug it in here. Nvidia, which although AMD will be a strong competitor of Nvidia, I don't think they're going to grow their free cash flows at the rate that Nvidia is doing. But regardless, I think Nvidia has strong free cash flow growth, which I strongly believe that they're gonna the growth is gonna come down in the next upcoming years. Look at that, 80% per year. And if you look at this chart here, from 2023 they had 3 billion, 2024 27 billion, and that's kind of the projection that I am also expecting to AMD. Obviously not at this level, but like doubling, or tripling every couple of years. So that's kind of what I'm seeing for AMD going forward. And even if you look at modest, like 30%, it's 30%, it's at 175. And if you look at historical multiples for AMD, mind you, the forward P is 22, so it's a steal deal. The average P is 34, forward P is 22 right now. So historically it's been cheapest for the past 10 years. And then you look at the output, I really like a good margin of safety of 25%. Acceptable buy price 137, but right now AMD is trading at $102. Going forward in the next 3 to 5 years, you got a great potential for AMD. It's a cheap stock. Buy it, put your money in it. It's going to turn out to be a great stock. So the next up on the list is PayPal Holdings, ticker symbol PYPL. Just a beast of a company, trading at so cheap. I was just telling my friends today, I was talking to them and they were asking me, what stocks should I buy right now that I'm going to have like a guaranteed like return in the next 5 years, at least double my money. I told them, like, hands down, PayPal. Just no doubt about it. Just looking at the return on equity is 20%. Free cash flow, my gosh, $6.7 billion. So you got a great cash flow here. And if you look at the cash flow growth for PayPal, and then we'll come back here. We'll go to Graham's valuation. So this is the Graham's equation, the original, and then there's revised for the current economic structures. And then if we look at PayPal's current average estimate EPS for the current year is $5.04. We'll go ahead and plug that in. And then I also like to see like what is PayPal's growth for this year. It's about 8.31%. Not bad, but you got to also think about their earnings surprise, because that's really important too. And they're doing a good like 10% surprise, and you kind of have to add that amount into the average estimates because they're just having surprises quarter after quarter. But another thing that I also like to look at is their average EPS CAGR for the 5 years is 21%. Even if you look at the current economic structures and we put in a modest 15% growth for PayPal, you're looking at $108 of the intrinsic value. And this is this is a margin of safety of 20%. Buy price is $86. That's a buy. And then you look at the discounted cash flow model. This is where PayPal just kills it, just destroys it. 10-year CAGR 15%, 5-year 15%. Let's go with an average 15% for a discounted cash flow model, and $287 using future cash flows. This is just like a steal deal for PayPal. And right now the PayPal's PE ratio is 15.89. You gotta be kidding me. They don't pay any dividend right now. I hope they don't pay any dividend. And then this is just, I don't know what to tell you guys. You guys looking at all these like Tesla's trading at 100 PE, Palantir paying at like 4 million PE. Like this is where you put your money. You find these good stocks, you find these good companies, you put your money in there, and it's going to grow. It's just easy. Some people are just like, no, but everybody's flocking to Palantir. I want to go and buy the Palantir. You're stupid. Look at the PE ratio of Palantir, 400. That means you're going to pay $400 for every dollar that you're going to make. Come on, man. Like, there was a time and place for Palantir, like 3 years ago when it was trading at $7. Yeah, go buy it. But no, everybody was hating on it. Everybody's like, it's a stupid stock. Nobody wants to buy it. Everybody's just hating on. Like, this is where when everybody was hating on this stock and you realize the growth potential for this stock, you buy it here. I wasn't making any money. I don't have any job at that time. I couldn't put in any money. I knew Palantir very well. Man, this is the time. I started making money around July of 2024, and I started investing like $1,500, $2,000, $3,000 every month, and now I'm here. But it was too late, Like, this is where that 10 bagger, imagine me buying 100 shares, 200 shares, 300 shares at $7. Now I'll be sitting at a good $24,000 cash. That's where you got to find these opportunities that are available to you, like PayPal. PayPal is an opportunity. You go and buy it. AMD is an opportunity. You go and buy it. And then you got next, all these good stocks. You go at you look at the analysis, you look at it, you have a strong growth potential, just beat it down past, you go buy these stocks, and you just there's a risk involved in it, but this is what you need to find. You can't go flock to the ones that everybody's flocking to. You gotta go and find the ones that everybody is hating on right now. And that's truly where the real money is. That's where those 10 baggers, the 10x money is. And all right, guys, next up in the list is e.l.f. Beauty. e.l.f. Beauty. What a beauty stock. What a beauty price. Man, $64. Oh, gosh. And really, people are not buying e.l.f. It's a shame. That's the thing with the stock market, it's like people start hating on something and they just hate it. They just hate it so bad. They're going to throw rocks at it. They're going to kill it. We got an average estimate EPS of 333. And you look at this surprise for the EPS surprise, okay? 80%, 30%, 60%. So if you're going to give me this growth rate of 4.75% for this year, I'm not taking it. Like, that's why you go here and you look at the EPS CAGR for the past 3 years, 36%, past 5 years, 13.4%. If you look at the past 3 years, like, that's where really e.l.f. has shined. Like, e.l.f. was $7 in 2019. Okay, but it was a hard company to really like gauge on whether it's going to go high or whether it's going to have a good growth, whether it's going to brand itself in all these big retail stores, like compete against like Estee Lauder, compete against L'Oreal, compete against Olay. Like, was it going to do that? Compete against all these like makeup products, makeup companies? There's so many, there's hundreds of them. e.l.f. did it. If you looked at my previous video, my second video that I ever posted, the 5 stocks to buy, I'll tell you in that I put in the latest quarterly result of e.l.f. and it showed how they have become like the top 5, top 2 in the world, in the United States, in the retail sector, taking that market share. And so I'm going to go ahead with a 30% growth rate for e.l.f. I'm sorry, but like, if you're going to say that e.l.f. is going to grow at $3.33, and then I'm going to put in as, modest, let's just go with 25%. 25% for e.l.f. I mean, it's probably going to grow more than that. And you got an intrinsic value of 104. Dividend cash, this is like the average growth rate since 2016 is like 82%. But it's a growing company, and I'm gonna give it for e.l.f. that in terms of their free cash flow rate, they might be burning a little bit more, but at least they're in a really good position. Instead of in terms of very low debt. I don't see e.l.f. having any sort of troubles if there was a recession coming up in the near future. If there was, and I don't anticipate on anything. And so they're overall in a good position. They don't have like billions of dollars of debt. Okay, it's trading at $3 billion valuation. I'm going to go with a good 25% from going forward. For the next at least 2-3 years. Okay, it's still a growing company. It's a very small growth company, and I don't anticipate it to like have any sort of near-term shutdowns for e.l.f. And if you look at the historic valuation, I looked at the forward PE for e.l.f. the other day, and it's 16. 16. There is some error. I don't think the company was in the stock market. They don't obviously give any dividend. It's a buy. Like near term, like e.l.f., you're looking at $98. All these like intrinsic values, like these are the values that the company should be right now. Like right now. Not like 10 years later, not like 2 years. This is like the price of the stock that should be like right now, and it's obviously trading at 40% discount. Easy money. 40% easy money, man. like, if somebody were to give me like $1 million and be like, Krishna, here's $1 million, you give me like um like invest that money in there, I just want about like 5%, whatever you make you keep. And like, I'm not talking about margin, don't pull up margin, but I'm just saying generally, if I had $1 million, like, these are the stocks that I would load up on. I would just blindly go in there and just put it in. If I'm wrong, I'm wrong, but I don't think I am going to be wrong. I think these stocks are going to just skyrocket going forward. All right, next up on the list is Adobe. Great stock. People are like, pooping on it because of AI is going to take over, and people are going to use all these other apps for Adobe. I haven't bought an Adobe yet. Great stock. I talked about it in the previous videos. I want you guys go and take a look at it. But here I'm going to do another quick analysis of Adobe. The most surprising thing is return on equity for Adobe is like 30 or 40%, 39.42%. Insane. And you look at the EPS average for Adobe is like $20.40. Surprise, 3%. So 11%. I would add it to this. Let me see the compounded EPS CAGR, 15%. Look at the trailing EPS trailing, 205%. But I think it's just the first quarter results or the next quarter's results. Like, so if you look at the 5 years, it's 16%. Let's put in 15%. All right, for a year, and then let's put in 20.40. You get $438 of intrinsic value. Okay, but if you look at the stock itself, historically speaking, it's cheap. Like, if you look at the valuation wise, historical valuation of Adobe, I have never seen Adobe trade at 24p. Period. Never, ever trade at 24p. It is a fantastic company, a fantastic growth company to be trading at this rate. Like, you don't get the chances like this, especially with Adobe. No. A company like this, you get this once in a lifetime chance. You take it and then you just go at it. You go at it 181,000% in lifetime. But look at that, my golly God. Yeah, I don't really anticipate like AMD or Adobe coming down beyond this point. Maybe it might go to like 370, 365, but like, yeah, it shouldn't be here. That's all I would say. And if you look at the god damn, 18.76. Are people really like just not looking at it, or are they just like, let's shoot and then see what happens, and then we'll go and deal with it later. Look at this Adobe free cash flow growth. I think this is important. I really like to use this FCF analysis to show, especially with companies that are at least have 10 years of a solid foundational growth of their free cash flows. Look at that. 10 years, 20%, 5 years, 13%, 3 years, 4.3%. So they're kind of, you can see that there's a little stagnation, but not as much. They've been steadily growing very, very, very well. So I don't have any problem with Adobe, and I think we can gladly put that 10-15% growth rate, because if you put it at 25%, it's saying it's $1,480, and I don't think it's valued at $1,480. But like, discounted cash flow 753, we already saw this. They don't pay any dividend. Oh, God. $600 stock trading at 383. Go buy it if you want to. Because sooner or later, the stock market is going to rally, and then you're going to be like, I missed out. Do you guys remember when Adobe was $383? And now, yeah, I saw a lot of videos about like buying it, but I just didn't buy it because I thought it was going to go lower. But now it's $650. Okay, we missed it. Yeah, that's what's going to happen. So, trust these analysis and trust yourself, and put the money in these beaten down good companies. Next up on the list is Nike. Nike. I got nothing much in terms of growth rate wise. Like analysts are obviously wrecking it. It's a great company, obviously, that's struggling, and the stock price is showing it like $64.76 for Nike. Less than the price right now is like never seen in the past 10 years. It's beyond 10 years. So it's trading at a really cheap price, and they pay a really good dividend. And I feel like you see this, the next year is really where the growth starts for Nike, and just like the turnaround period. And then you got Elliott Hill. He's doing whatever he can to turn around this company, and you just kind of have to hope that he does it. And so I'm really counting on Elliott Hill, and I think he will definitely like make a comeback. But the way that I like to do Nike's analysis is I like to see their free cash flows, because if they're not making any money and they're not having any growth right now, and they're in a negative, like this is probably the best metric to kind of see how they're doing, is to how are their free cash flows growing? Absolutely, they're growing. Absolutely. 10-year free cash flow compounded annual growth rate 12%. Like if you look at this, 2023 4.8 billion, 2024 $6.6 billion. Like they have $6 billion in cash right now. And look at Nike free cash flow growth rate projection. Let's just put in 10%. It's $118. $118. Put in 0. Yeah, people are thinking it's going to be 0% growth for their cash flow. 5%, $83. 10%. This is where it is at. $120. Oh, these are great stocks, guys. Listen up. You get these opportunities. You don't get these that often. You go ahead, you buy it, you keep it forever, and you make that money. Okay. And I just wanted to tell you guys all, thank you so much for watching my videos. And if you enjoy the content, please hit that like button. That's going to help me out a lot. And if you like the channel, please subscribe. I do post a video every single day and upload them at least before like 9 p.m. Eastern time. I do work, so that's definitely taking up majority of the time. Okay. So thank you so much, and tune in. A new video coming out tomorrow. Love you all. Bye.